Welcome back. Today, we are diving into one of the wildest, most pivotal days the market has seen in a long, long time. Wednesday, February 25th. It was a day of pure whiplash, where you had political drama, AI-fueled panic, and massive earnings reports, all crashing into each other. So, we're going to unpack it all, using some sharp insights from the PhilStockWorld Morning Report and the AGI Round Table's end-of-day wrap-up.
All right, so here's how we're going to make sense of the madness. First, we'll look at what we're calling Wednesday's wall of noise. Then, we'll dig into the AI civil war that was really at the heart of it all. From there, we'll see how the AGI Round Table brought some clarity and how that pointed to a major value opportunity. Then, we'll break down the Be the House strategy that lets you capitalize on moments just like this, and we'll wrap up with the key takeaways that give you, the investor, a real edge.
So let's just set the scene for a second. Wednesday morning was an absolute fire hose of information, and almost none of it agreed. It honestly felt like the market was being pulled in three completely different directions at the exact same time.
And this quote from Phil Davis in his morning report at PhilStockWorld.com just summed up the mood perfectly. After this brutal sell-off earlier in the week, the market was trying to bounce back, but you could just feel this incredible tension under the surface. It was definitely a day to buckle up.
First up, you had this political earthquake. President Trump had just delivered a marathon 108-minute State of the Union, and the ripple effects were creating huge uncertainty around everything from trade and tariffs to regulations. The market was still trying to figure out what it all meant.
At the very same moment, the entire tech world was basically frozen, waiting for one single thing: Nvidia's earnings, which were due right after the bell. And look, this wasn't just another report. This was seen as the definitive referendum on the entire AI boom. The stakes just couldn't have been higher. And then, layered on top of all of that, you had this simmering panic that people started calling the SaaSpocalypse. This narrative was taking hold that AI wasn't just going to create new companies, it was actually going to destroy the business models of all these established software-as-a-service giants. It was a true wall of noise.
So here's the really crucial part. All of this noise wasn't just random static. It was actually coalescing into one single, massive battle for the soul of the market. This wasn't just volatility. It was pretty much an ideological war being fought with capital.
And this slide illustrates that conflict perfectly. On one side, you have what we're calling the matrix economy, and this whole side is driven by fear. This is the SaaSpocalypse world, where a single thought experiment from Citrony research about a global intelligence crisis can send software stocks into a nosedive. But on the other side, you have the atoms economy, driven by hard physical reality. This is where you see massive $100 billion deals like AMD powering Meta's real-world data centers. What we were seeing was a violent rotation of money out of the digital and into the physical.
So how in the world do you navigate this kind of chaos? You need a framework, right? When the market is this schizophrenic, you have to have a methodology to separate the actual signal from all of that deafening noise.
And this was the one question every single smart investor was asking themselves. Do you trade the fear? Do you invest in the reality? Or is there maybe a third path entirely? Well, this is where the AGI Round Table brought some incredible clarity in their end-of-day report. Their analysis engine, which they call Zephyr, just cut right through it all. It said, look, it's not about which narrative is right. It's about following the money. And the data was crystal clear. Capital was fleeing those capital-light software companies and piling into heavy infrastructure.
Now, what's really fascinating here is how that big picture, top-down clarity immediately starts to reveal opportunities on the ground floor. Because when an entire sector gets sold off based on fear, some really great companies get thrown out with the bathwater.
Just take a look at HP Inc., ticker HPQ. They actually beat on both earnings and revenue. But because they're a hardware company, they got swept up in this downdraft and sold off 5% based on completely irrational fears. It was pure emotional selling, and it created this huge disconnect between the company's price and its actual value. And here is the punchline. This panic selling pushed HPQ's valuation down to less than 6 times its projected 2026 earnings. For a profitable, world-recognized tech giant, that is an absurdly low number. For the folks at PhilStockWorld, this wasn't a signal to panic and sell. It was a screaming buy signal.
So this HPQ trade isn't just some one-off idea. It's the perfect, real-world example of a really powerful investment philosophy, one that separates systematic professionals from gamblers.
This quote from Phil Davis really gets to the absolute heart of it. The goal isn't to be a fortune teller and perfectly predict the future.
The goal is to build an income-generating system that can survive volatility and actually profit from the predictable emotional mistakes that other people make. So how does that actually work? Well, it's basically a four-step process. First, you have to be patient and wait for these moments of irrational panic, just like we saw with HPQ. Second, you do your homework to identify the fundamental floor, the real value of the business that's underneath all the noise. Third, you sell that fear. You can use strategies like selling options premium, which is basically getting paid by the market to be the calm in the storm. And finally, and this is key, you manage the whole system. You're not making one big bet. You're operating the casino, where the house always has an edge over time.
So after a day filled with whiplash, political noise, and this AI civil war, what are the big lessons we can actually walk away with? How can you apply this to your own investing?
First, you've got to learn to see through the noise and identify the central conflict. Right now, that's this war between the matrix and the atoms. Second, start to see market panic as your best friend. It's your primary tool for finding amazing value. When everyone else is selling out of fear, you should be buying based on analysis. And most importantly, shift your entire mindset from trying to be right to building a system. Structure your portfolio to be the house and collect income from the market's totally predictable emotional swings.
And that really leaves us with one final question to think about. As AI gets more and more tangled up in how markets work, everyone is racing to build a smarter algorithm. But as we saw today, maybe the real durable edge isn't about outthinking the machines. Maybe it's about building a better, more disciplined human system that's designed to profit from the very chaos they help create.